good morning, good afternoon, ladies and gentlemen. Welcome to the conference call. Today with us, we have Roland from Citi. Please begin. Thank you.
Thanks, operator. Good morning, good afternoon, everyone. Welcome to the Global Wafers Earning Conference Call. I'm Roland Shu, Semiconductor Analyst of Citigroup. During the call today, the Chairperson and the CEO, Ms. Doris Hsu, will start with executive comments. Mr. William Chen, the Vice President and IR, will present fourth quarter 18 operational performance. Fourth quarter 18 financial results, along with the presentation materials, have been uploaded in MOPS. It can be also found on the Investor Relations section of the company's website. Without further ado, I hand over the phone to Mr. William Chen. Mr. Chen, please.
Thanks, Roland. Hello, everyone. Welcome to Global Wafers 2018 fourth quarter earning conference call. I'm William Chen, Vice President as well as Global Wafers spokesman. As Roland said, we also have Doris Hsu, Chairperson and the CEO of Global Wafers in this call. Doris will give us some executive comments later. And then I will present the 2018 financial performance. The final Q&A session will be hosted by Doris as well. For today's presentation file, we had just uploaded onto our website around 2 hours ago. If you do not have this file on hand, please access into our website to get the most updated file. Please note, some information during our discussion today will consist of forward-looking statements, which are applied throughout the call and this presentation. These are subject to significant risks and uncertainties. Actual results or trends could differ materially from our forecast. Please refer to the safe harbor notice in our presentation. Now, I'd like to turn the call over to Doris for page 2, executive comments, and I will report you our 2018 performance after. Doris, please.
Thank you, William. Good day, everyone. Thank you very much for joining our Global Wafers earning conference for 2018 overall performance result. 2018 was a recording-breaking year for GWC. Our revenue, shipment quantity, gross margin, operation income, net income, EPS, free cash flow, and dividend of 2018 are all record high for GWC. We have seen very strong demand and price recovery from 2016's bottom for all diameters throughout 2018. GWC board today also approved a historical high cash dividend of 25 NT per common share. Of course, this dividend 25 per common share, this is subject to GWC AGM final approval, which has been scheduled on June 25th. Total cash dividend this year will be amounted up to NT dollar 10.9 billion. This 2018 dividends will be one-time payout in August 2019. In addition to very strong market demand, I think long-term agreement policy is one of the main factors contributing to GWC 2018's overall very good performance. In the past, GWC always honored every long-term contract with all of our customers. So we will keep the same policy. So far, no LTA breach. Most of our capacity has already been booked by LTA with prepayments for years. Our prepayment amounted to NT dollar 23 billion or US dollar 733 million as of end of 2018. In addition to those existing LTAs, we have finalized some new long-term agreements in Q1 this year as well. Maybe this is a little bit new for the market, but yes, I want to confirm to everyone that we did close some new long-term agreement with prepayment in Q1. Same as all existing LTAs, those new LTAs are with prepayments as well. None of those new LTAs price is lower than existing LTAs. So all of the new LTAs price are either equal to or a little bit higher than existing LTAs. That's another very important information I would like to share with everyone. We are having I think most of the everyone understands that we have a new expansion in Korea. Let me update a little bit about the status of our 300 millimeter capacity expansion in Korea. We have a 300 millimeter capacity expansion in Korea. It was started from October 2018. It's not a greenfield project. Part of the building is new. But part of the facilities and infrastructures are supported by existing buildings in our Korean campus. So we continue this expansion project as planned. There is just a little bit, a slight delay, weeks of delay on this, the completion of the construction. Revenue contribution from this expansion will be from 2020. The CapEx needed for this project is fully funded by LTA customers, and the capacity of this project has been reserved by LTAs for more than 5 years. Now I would like to share with everyone of our view for the worldwide market outlook. First of all, ASP. I think 2018 silicon wafer ASP will reach 0.9 US dollar per square inch, the whole 2018's average price, 0.9 square inch per square inch. Q4 2018 was as high as 0.92. It's recovered from 0.79 per square inch in 4Q17. So our view is that 2019 annual ASP will be still higher than 2018 ASP. But the growth, the ASP increase will be much flatter than last year. So our view is that it will be mid-single digit increase on ASP versus 2018. This ASP increase are from the following reasons. Number one is that product mix of 2019 will be slightly different than 2018. The demand for advanced wafer or specialty wafers, such as ultra-high resistivity wafers, ultra-low resistivity wafers for power applications, for 5G, all of these specialty wafers, the demand for these specialty wafers will keep growing upward. Ordinary products maybe will be declining somewhat. So this is the first reason why we think that 2019's ASP will keep improving. The second reason we think that ASP will be better than 2018 is that our LTA prices are protected. All of our LTA prices of 2019 is higher than 2018. So from GWC's viewpoint, we expect to see ASP improvement in 2019, although percentage-wise may be slightly lower than 2018's growth versus 2017. So this is our view for ASP. And what about the inventory corrections or the overall market status? I think due to some headwinds such as trade tensions, macroeconomic uncertainties, etc., the demand for high-end mobile phone, memories, handheld devices are softening. Some of our customers continue their inventory corrections in Q2. Nevertheless, we are still very confident of the underlying growth of our market. Many new applications are under development and will be launched to the market in a big way. For example, we believe that 5G, AI, EV, data-centric, 3D NAND, all of these will grow very solidly in the very near future. We expect the market will recover from second half of 2019. And we are very confident that GWC will keep growing this year as well. So that's some comments from my presentation. You can find a lot of details on page 2 of your presentation. I would like to pass the presentation to William for the detailed financial results. Thank you, William.
Thanks, Doris. Let me continue the 2018 financial results detail. Please turn to the page 3, 2018 financial highlights. In 2018, as Doris just mentioned, GWC achieved an all-time best financial year result in following aspects: revenue, gross margin, net profit, EBITDA, EPS, and the free cash flow. Number 1, revenue. It's all-time high. We had 12 consecutive quarterly growth. It's increased 28% compared to 2017. Number 2, gross margin, net profit, EBITDA, and EPS. They were all-time high. Number 3, loan. We had reduced 80% of bank loan compared to beginning of 2017. Number 4, free cash flow. As of 2018 quarter 4, we generated 29.484 billion NT dollars free cash flow. That was also all-time high. Number 5, prepayment. It's 23 billion NT dollars as of 2018 Q4. Also, we had this record high prepayment. For this item's detailed figure, I will explain more in later pages. So go to page 4, financial highlight. Okay, from the table you can see all listed items had a significant YOY growth percentage. In fact, all these items were GWC all-time high results. For revenue, we achieved the sales revenue 59.1 billion NT dollars in 2018. It's up from 46.2 billion NT dollars in 2017 sales revenue. That was 28% YOY growth. For EBITDA, we had 22.7 billion NT dollars in 2018. It's 86% YOY growth from 12.2 billion NT dollars as of 2017. In terms of EBITDA percentage, it had YOY 12% increasing from 26% in 2017 to 38% in 2018. About operating profit, it was 17.6 billion NT dollars. That's 137% up from 7.4 billion NT dollars in 2017. In terms of operating profit percentage, we had reached as high as 30% in 2018. That is 14% higher than 2017. For net profit and net profit percentage results, comparing to 2017 net profit 5.3 billion NT dollars, GWC earned 13.6 billion NT dollars net profit in 2018, which was YOY 158% high. Besides, 2018 net profit percentage has been rising to 23%. That was more than double in 2017. About 2018 EPS, GWC also earned all-time high 31.18 NT dollars. It was 18.5 NT dollars more than 2017. For ROE and ROA, we had significant YOY growth, 14% and 9% respectively in 2018. We had reached record high 35% ROE and 17% ROA in 2018. Let's go to page 5, revenue. GWC continuously generated all-time high revenue, earned 15.6 billion NT dollars in 2018 Q4. It's driven by strong growth across all segments and the worldwide customers. This was also GWC's 12th consecutive quarterly growth. About 2018 Q4 gross margin ratio 38.5%. It was slightly lower than 2018 Q3, 39.0%. The main cause was GWC couple fabs annual maintenance shutdown in Q4 last year. Go to page 6, EBITDA and EPS. 2018 EBITDA was 22.7 billion NT dollars. That's nearly double compared to 2017. The EBITDA percentage was as high as 38.5%. It's up from 26.4% in 2017. For EPS, our boosting business also contribute 2018 EPS to a record-breaking high of 31.19 NT dollars. That's the record high since company established. For page 7, leverage ratio. Total bank loan. GWC repaid all bank loans associated with the acquisition of Sun Edison Semiconductor in December 2016. Our bank loan in 2018 Q4 was as low as 5.5 billion NT dollars only. Besides, our net cash position grows significantly in 2018. That's indicating healthy financial conditions for our future growth. Here, just note, this 2018 Q4 cash amount, 35.2 billion, was including the prepayment 23 billion NT dollars. We will have more detailed quarterly bank loan and cash position in next 2 pages. Okay, for page 8, bank loan. GWC acquired Sun Edison Semiconductor in 2016 December with higher debt name. Yet, GWC had strong repayment capability to reduce those bank loans from 27.3 billion NT dollars in 2017 beginning to 5.5 billion NT dollars in 2018 year end. That is, we had cut 80% of bank loan in these 2 years. For page 9, prepayment. In this page, GWC is continuously accumulating prepayment amounts in 2017 and 18, which indicates our significant portion of capacity has been booked. Besides, the price protected LTA secured by this cash prepayment will support GWC's sustainable development later. Page 10, dividend payout. Same as usual, this year GWC will keep a high dividend payout policy in bring out profitable earnings to all shareholders. We had proposed a historical high cash dividend of 25 NT dollars per common share to all shareholders. That to be convened in GWC 2019 AGM on June 25th, 2019 at Hsinchu Science Park. Okay, page 11, income statement. In this page, I just recap 2018 result in all these items: revenue, gross profit, EBITDA, operating profit, profits before tax, net profit, EPS are all-time high in company history. All of them had also a significant growth comparing to 2017. Okay, next page. Page 12, balance sheet. We had already adjusted 2 good shape key items, bank loan and cash position in previous pages. Regarding inventory here, given we had sales revenue YOY growth 28% in 2018, we still managed the inventory as low as 7 billion NT dollars only, which was even 307 million NT dollars lower than 2017 Q4. And finally, for shareholders' equity, it was increased also from 34.1 billion NT dollars in 2017 up to 43.2 billion NT dollars in 2018. Okay, so above is my presentation for 2018 financial result. So next, I would like to hand over to Doris for the Q&A session. Doris, please. Thank you.
Yes, any questions, please?
Ladies and gentlemen, should you like to raise a question, please press star 1 on your telephone keypad. Our first question comes from Credit Suisse, Hasliu.
Hi, management. Thanks. Congratulations on the good results, and thanks for taking my questions. So my first question is regarding your expectation for first quarter. Could you provide more detail on how the customer inventory correction will impact your near-term business? Thank you.
Yes, thank you, Hasliu. Q1, actually, many of our customers are having very high pressure on inventory correction because of the market uncertainty with low visibility. So many of our customers are, they did discuss with us for the inventory adjustment. But so far, as far as we know that all of our customers are honoring all LTAs, so they cut the spot non-LTA quantity. So that's what we see. But regarding to our customers, that how many percent of their inventory reduction, inventory correction, how much too much high DOI, how much is raw wafers? Actually, we don't have detailed information of that.
Okay, so do you see a lot of customers are actually pushing out their raw wafer delivery time frame? Or you...
I think, yes, many of our customers are discussing with us, check with us that it's possible to push out some of the LTA shipment. So far in Q1, we haven't agreed any push out yet. So Q2, we will see that how the market looks like. But I think that the market will be recovering from second half. So I think that the pressure will be a little bit lower. So to answer your question, Q1, many customers are talking with us for the push out, but actually everyone honors the conclusions that everyone is honoring their LTA. So that is why that if you check our January, February revenue, actually our January, February revenue, GWC revenue, Y on Y was 10% higher than last year. So this performance is not bad. And very soon, I think in around 10 days, you will see our Q1 overall revenue. I think you will see a okay number as well. So far, we have seen that we have firm shipment schedule. So far, I think that Q1 will be doing quite okay. But I think that Q2 maybe more customers will have further discussion with us talking about the flexibility. We will check the macro market status and because the LTA terms and conditions differ from one to another, so we will check case by case and discuss with customer to work out a win-win arrangement. Q2. Thank you.
Okay, thank you. So my second question is regarding your full year growth outlook expectation. You mentioned the market will start recovering from second half this year. Could you provide more detail on your expectation for full year growth outlook, and what should we think about the growth trajectory by first half versus second half this year? Thank you.
Yes, I think first half, I think most of the pressure were from two parts. One is the uncertainty, so everyone is very conservative to build the inventory, and the second is the inventory correction because most of the companies building up their inventory in the past 2 years too much, so they were trying to lower their inventory level. We do see many of our customers' inventory level is improving, so they're not that high anymore. Especially some customers now they are asking us to check that if it is possible to pull in some products. So we think that the market will be healthier by end of the first half. So we think that second half of the year, I think I'm talking about GWC itself. I think our second half of 2019 should be better than the first half. Our first half, actually, our Q1 is not bad. Q2 may be a little bit pressure, we will check that customers' inventory. But in general, I think not only GWC, but also the worldwide market, I think second half, more and more customers and application will see some recovery. So second half will be much better than the first half. Our guess is that second half maybe will be around 10% better than first half of this year. So total, the whole year, our guess is a low single digit higher than 2018 YoY. That's our view. Of course, our customers, because of some macroeconomic uncertainties and some trade tensions, so actually customers are not. Actually, everyone is checking about the potential recovery. So those are our expectation and our view. Thank you.
Okay, so you're expecting low single digits year-on-year growth in 2019. Is that correct?
That's correct. Yeah, so far. Pretty much depends on second half of this year if the recovery is better than our expectation. Actually, our internal forecast can be even better than that. But for now, yes, I would say yes. That's our view. We will grow, and it will be a mid single digit growth. That's our view.
Okay, mid single digit. That's great. So my last question would be just your profitability. Could you provide more detail on the normalized gross margins in fourth quarter if we exclude the fab annual maintenance? Thank you.
I think it should be somewhere around very close to Q3. If there was no special preventive maintenance in Q4, our Q4 gross margin should have been very close to Q3. That means somewhere around 39%. But our actual result Q4 was 38.5%. The only reason for this is because of those planned, scheduled preventive maintenance in several big fabs, flagship fabs in Japan and Taiwan. So without that one, it should be somewhere around 39 to 39.5% Q4 last year.
So can we expect a further mild improvement in 2019?
It's hard to say so far because there are some specific items which we cannot control. Part of the reason is small diameter. I think we do see some headwinds, especially for small diameters now. The situation for small diameter is even a bit tougher than 200 and 300 millimeters. So we don't know that how soon those small diameter recovery will begin. So it's a little bit hard to project that how the gross margin will be in 2019. And basically, we don't really give outlook numbers. So it's a trend chart wise. So I think it's a little bit hard for us to project.
Okay, thank you so much.
Thank you, Hans-Wei.
Thank you. Our next question comes from Nomura. Donnie?
Thank you, Chair Lady and William. My first question is regarding to you mentioned about there's a new customer has signed a new long-term agreement with you in first quarter. I know you probably cannot provide much detail, but wondering what kind of application or what kind of end products these customers are looking at, so they are willing to sign the long-term agreement during the down cycle.
Yes, thank you very much, Donnie. We closed some new LTAs in Q1, and we have several more under discussion right now. Haven't closed yet, but I think that maybe the second quarter maybe we'll close a couple more. And so far, it seems that the customers who have much better visibility now is most of them are power-related applications. Their end applications are power-related applications. And product-wise, many of them are SOI product or FZ-related product.
So it's more like 8-inch or as well as 12-inch as well. I guess probably mostly IDM companies. Is that correct?
That's right. The new LTAs happen to be 8-inch, but we have some other products under discussion as well. But it seems that so far the new LTAs we've closed are 8-inch.
Got it. So it's likely that 8-inch demand is still relatively stronger compared with 12-inch, right?
Yes, at the moment, yes. I think part of the reason is because 200 millimeter come in very big variety of applications. I would say that more variable than 300 millimeter. So our automotive, our power management, IGBT related products, most of our customers for these applications are still quite positive. And another reason for this is that for power applications or automotive application, you know that the qualification takes time. So customers prefer to start the qualification now. They want to lock up the capacity, just in case that they finish the qualification, but they cannot lock up the capacity. That would be a big loss for them. So I think that is part of the reason why we see more 200 millimeter customers, especially for power-related customers, are more positive to sign new LTAs or extend new LTA with new prepayment. I should put it this way.
Got it. Thank you. And my second question is regarding to your sales momentum versus your customers' sales momentum, because it's not like LTA is a good protection since October last year, because since October last year the overall industry has corrected a lot in terms of the market size, but our sales momentum is still pretty resilient till today. But I'm a little bit worried about is that the raw wafer shipment has increased a lot in the past few quarters, but it has not corrected along with the semi industry. So how do you think about I know you will protect the LTA for sure, but how should we discuss with customers on the future LTA? It's more like they are, pre-order some raw wafers, probably in their warehouse. But does that mean in the future they may be not able to order more raw wafers when the semi cycle is recovering?
Yeah, Donnie, I fully understand your concern and your viewpoint, and that is what we are monitoring very closely as well. We talk with customers one by one, case by case, LTA by LTA, because the conditions and terms are different. So we try our best. Actually, we presented that Q1 our sales revenue is quite okay because LTA, no LTA breach. But this is the status we are presenting to the market. But matter of fact, we are providing some flexibility to customers as well in order to avoid from super high inventory DOI at our customers' place. Then when market, just like what you said, that when market's back, maybe they have no space, they cannot buy any new wafers from us. So in order to avoid from this kind of situations, we try to be as flexible as much. So that means that as soon as basic LTA is based on this kind of product, this kind of volume, and this kind of price. So these conditions are firm, but we give them some flexibility to swap some product. For example, if my LTA said that I will buy 2 AP wafer and 1 polished wafer, but unfortunately polished wafer demand is weak, but my AP is stronger, so we will give them the flexibility. Okay, then you can buy more AP and reduce some, push out some polished wafers, that kind of arrangement. I cannot disclose too much our business tactics here, but just want to let you know that we are not forcing our customers to do whatever exactly same as LTAs. We try our best to provide the flexibility and to accommodate their current situation. So we are confident that when the market is back, we will be okay. That's our view. And there is no real long-term conclusion for LTA, especially for 2019. So what we are doing now is that we talk with customers quarter by quarter. So Q1 we have already fixed and we work out some good result. And Q2 we will check with customers how's their view for the second half, the recovery, and how's their inventory status. So maybe they want to swap this one to another one. So we will check with customers item by item, but our way is that no renegotiation on price and no renegotiation on the LTA size.
Got it. Thank you. I'll be back to the queue.
Thank you.
And our next question comes from Charlie from Morgan Stanley.
Yes. Hi, Doris. Hi, William. Thanks for taking my question. So first of all, congratulations for the strong results last year and the strong execution. So first of all, my question is regarding your comments about customers cutting orders in the spot markets, because I think recent news also suggests that your competitors are cutting spot price. So with now spot price is lower than contract price, would the customer also ask to cut a price to match the spot markets? Because in this situation they can get a cheaper wafers from the spot market. I'm not sure if this is a right thinking.
Yes, thank you, Charlie. Yes, some of our customers did come back to us and tell us that they can buy. If there was no LTA, they could purchase some wafers at a lower price from the spot supplier. So we did receive this kind of request from some of our customers. But I think a key point of our LTA is that we have a sizable prepayment. You see that we have more than 23 billion prepayment as of the end of the year. So because of the prepayment, I mean, according to our contract, if the LTA breach, we can pocket the prepayment. So that is a big loss, and we don't want to pocket anyone's prepayment. We want a business, we want a relationship. So we talk with customers, and up to now, all customers understood that that is how we're going to work together. So we try to maximize our flexibility to our customers as much as possible, but for price-wise, no renegotiation on price, no matter how low the market price, spot market price is. So far in Q1, we're okay. And I think Q2 maybe will be a little bit challenging because the uncertainties. But I think that if customers do see some positive signals when the recovery is more apparent, I think they will be okay to accept a little bit high inventory. That's our view. But I think for Q2, we just started the negotiation discussion with customer item by item, LTA by LTA. So that's the current status. We do see a little bit lower price on the spot market, but our customers are okay with our LTA. So far, none of our LTA revised any price.
Okay, thanks. Then can I ask some kind of a mid to long-term outlook, right? So first of all, you mentioned that some customers are still signing the LTA with you. So just to put those in new numbers, right? In terms of LTA percentage for 2019 and 2020, 2021, what is the LTA percentage trend?
2019 is the highest. LTA coverage 2019 is the highest. 2020 is a little bit lower. Part of the reason was that you remember that last year we were very close to finalize a lot of LTAs from 2020 to 2024, 2020 to 2023. So we have several 3 years, 4 years, 5 years LTAs under discussion. But then suddenly it seems the market sentiment is weakening. So some of our customers slow down the procedure. We finalize basically everything, but slow down the signing procedure. So I would say that 2020 now the LTA coverage is slightly lower than 2019. But we are still quite confident on this one because when 2019, if the second half of 2019, if we do see some recovery, I think so far our view is that starting from 2019, second half this year, and 2020 as well, the market will be back. So when they see some recovery from the second half, I'm very confident that our customers will come back to us and ask us to resume the discussion, the signing procedure for the new contracts from 2020 to 2023 and 2025. So in a nutshell, our current LTA coverage for 2019 is the highest so far, and 2020 will be slightly lower than 19. To answer your question, thank you.
Okay, so it seems like lots of hope is on second half recovery, right? No matter for this year and next year. But regardless, your gross margin seems to be higher than your industry peers, even the industry leader, Shinetsu. Right. So we've got lots of questions from investors why your gross margin can be higher than your industry peers. Can you give us some explanation on that?
Yes, I think GWC has some very unique position. That is, GWC, the growth of GWC in the last 10 years, mainly from some M&As. And those M&As help us to lower our overall depreciation cost because of our procurement cost. I mean, M&A cost is lower than our organic growth. If we want to build the capacity 100% by ourselves, I think our CapEx, our depreciation will be higher than that. So I think part of the reason is because our depreciation cost is a little bit lower than the peers. And this is mainly because of that our growth method is from M&A instead of organic growth. So this is the first reason. And the second reason is because I think because of our LTA coverage I think that our LTA coverage is higher than the peers. So and all of our LTAs are protected by prepayment. So I think our overall price, so far all of our LTA prices are going up in a very healthy way. So I think that is part of the reason why our overall gross margin is a little bit better than our overall profitability is a little bit okay. Of course, the whole GWC our culture is very cost sensitive as well. So if you check our OPEX is only 8% in Q4 last year, only 8%. If you check our inventory remains $7 billion, even the revenue double. So we have a lot of management focus on those real operation things, and high cash is another reason of our higher profitability because of the interest. Actually, we got quite okay interest income as well. So that's the main reason we think compared with our peers.
Okay, that's very helpful. Thank you.
Thank you, Charlie.
Thank you. Our next question comes from Andy Shu from AB.
Oh, yeah. Can you hear me?
Yes, Eddie, please.
Oh, yeah. I just have some housekeeping, actually. So do we have a first quarter shipment number?
No, we don't really disclose specific shipment numbers in fourth quarter or any quarter. No, we don't.
Okay. Can you provide the kind of sense that in the second quarter, will it be a Q-on-Q growth on the first quarter?
You mean revenue-wise, we can provide revenue growth, but we cannot provide shipment quantity. That's not our. Our policy is that we don't really disclose shipment quantity.
Oh yeah, sure. I mean, is that the revenue growth? I can understand that, but in terms of shipment, will the shipment also grow in the second quarter?
Yes. Yeah. You mean the second half of this year?
No, second quarter.
Second quarter of this year, I think it's challenging. I would say that it will be flat.
Oh yeah.
Second quarter.
That's how
I think I would like to make it very open here that I think second quarter is quite challenging because of some uncertainties. So I think we have to work very closely with our customers to discuss some creative way to manage those LTAs. So second quarter, I think that maybe the total shipment quantity maybe will be flat versus Q1.
Okay. And another question is regarding to this actually. So when we talk about that, we believe there will be a recovery in the second half. I just wonder in what kind of evidence that we have this confidence that second half will recover.
There is no real evidence, but that's just based on that our discussion with all of our customers. We check their view, we check how they think about the demand, when is your new product going to be launched, and also another very important information we analyze and rely on was the special policy released by Chinese government on March the 2nd or the 5th. March 5th, China central government released a new stimulation package, stimulation policy for the whole China market. And we believe that China is a very important market. When China stimulation package is released to the market, I think second half China will be the overall sentiment and the overall market demand in China will be better than the first half. That's our view. Because it was just released on the 5th of March. So actually all the local governments studying that how to implement those stimulation packages. So I'm quite confident that China will not stay low for the whole year. The central government will do something to improve the overall market sentiment. That's our view. So we don't really have any direct evidence showing that second half will be recovering.
Okay. Thank you. Okay. On one last question, and compare with a few weeks ago, maybe, or a few months ago, do we see any push out in the second quarter?
Yes, Eddie. I think in Q1, of course, many of our customers were asking us to have some grace period or some flexibility, but we managed Q1. So Q1, you will see that we have good sales overall performance in Q1. Q2, we do see a little bit more customers coming back to us for the inventory correction, and actually. That's the most frequently discussed question right now with our customer right now for Q2.
Okay, thank you very much. Thank you,
Eddie.
Thank you.
Thank you. Next question comes from Sebastian.
Noise.
Hello.
Hello. Yes.
Hi, Doris. A few questions. The first one, you mentioned that you expect the second quarter to be pretty challenging, and you say that shipment-wise, you expect to be flat quarter-on-quarter. So does that mean that the pricing-wise is under pressure?
I think Q2, the pressure for Q2 will be more a quantity shipment pressure instead of the price pressure. So that's current status. Our customers, only very little of our customers are talking with us, talking about that. What about the price adjustment? But most of I think more of the customers who coming back to us are talking about the shipment flexibility. So that's what we are seeing. So I would say that we don't have that much price pressure in Q2, but more a shipment schedule, shipment arrangement pressure.
Right. But given that you say that more customers coming back, given that they ask for some grace period in the second quarter, but with that consideration, you still expect the volume to be flat Q-on-Q?
So far, our policy remain intact. So basically, we're not going to open the renegotiation of the LTA. So LTA is LTA. So we hope that we can provide some flexibility. But basically, we are still working with our customer. Our goal is to have 100% of the LTAs honored. That's our goal. So, but we will try our best to provide some flexibility. That's why we think that maybe overall shipment-wise, we should be flat. But I know that is customers. Some of our customers are definitely asking for some flexibility. But I would like to, I don't want to make everyone to be a bit too concerned about this one. Q2, matter of fact, today, already March 19th, so we have already closed many of the shipment plan for Q2 already with our LTA customers. So there are not that many customers. Of course, many of them came back to us and asking for some flexibility, but we have already closed most of them. Some customers are still working with us for some minor adjustment.
Okay, thank you. So here's one scenario question: that if the customers indeed would like to postpone their volume procurement, and would you dynamically adjust your fab loading rate, or you will keep running at as high as utilization rate as possible?
Yeah, so far we don't have this issue yet. But I mean, if for whatever reason, if the real demand is lower than our current capacity, then maybe we will have to lower the production a little bit. But so far, this is not our plan. A very important reason is that you know that we have an expansion in Korea, right? Which will be ramping up from end of 2019 and contributing revenue from 2020. So for me, slowing down or lowering our utilization now is not a good idea. I prefer to keep producing wafers. Even we have to make the inventory a little bit higher. I think that will be healthier. That will be a better arrangement than that next year. Because when you have a new production line, the qualification, the production ramp up, new people training. I think there are some even it's 100% in our current campus, but it still have some uncertainty. Just like what I said earlier, that we are experiencing some construction delay, weeks, not serious, but weeks delay. So we have to prepare. I mean, even our inventory is a little bit higher. That is very healthy because we know that we have a long-term agreement, 5+ years long-term agreement for our new expansion plan. So to summarize my answer to you is that basically I think it's very likely, unless really the market demand is really crazy low, which I don't see anything like that. But basically we will keep all of our production utilization very high, even if needed. Even our inventory is a little bit higher, that will be okay as well, because we will have a new expansion ramping up next year, and we need to protect a little bit. I think it's similar to our Q4 last year preventive maintenance arrangement. Whenever we have a planned scheduled preventive maintenance, we always have to build our inventory. We have to intentionally build up our inventory a little bit just in case that the maintenance delay a couple of working days and you have a little bit higher inventory that you can protect to make sure that your production, your shipment will be very stable. So same as that kind of situation when we are doing our expansion in Korea, and if we have some 5%, 2%, 3% inventory available open now, I think the best strategy is to fully utilize them, build a little bit higher inventory to protect just in case some delay in the new fab. Yes, that's my view. Thank you.
Okay, thank you. Can I ask about your guidance for this year, CapEx and depreciation?
Yeah, our CapEx this year will be much higher than the past. Main reason is that we will have a Korea expansion, and in end of Q3 last year, we have already announced that our total CapEx for this Korean fab is $430 million. Of course, it's not 100% this year. It will be 2019 and 2020, 2 years, the CapEx in Korea. So, I mean, what I want to say is that our CapEx 2019 will be higher than 2018. Our 2018 CapEx is somewhere below $7 billion.
Right.
NT dollars. Sorry about that. 7 billion, slightly lower than 7 billion NT. That was our CapEx in 2019. But this year, 2018, our CapEx was slightly below 7 billion NT. In 2019, we are expecting to see high CapEx, somewhere around maybe 12 billion NT, about this range.
So
CapEx will be a bit higher depreciation will be quite flat because the real depreciation increase will be after 2020. When the new expansion is ready, then we will see higher depreciation. So this year, basic depreciation will be same as the past several years, will be always lower than 5 billion NT. That's the range.
Okay, so you only start to depreciate it when even you have installed it but not really reached the commercial production.
That's right. Yeah.
Okay, got it. Thank you.
Thank you very much.
Thank you.
Hi, operator. This is Roland from Citigroup. Due to interest of time, let's open the line for the last dialers for Q&A.
Okay. Last question comes from Sunny Lin from UBS.
Hi, Doris. Hi, Willem. Thank you for taking my question. So big congratulations on your record earnings for 2018. My first question is on your opening remark regarding 2019 ASP. You said 2019 ASP should be higher than 2018 by about mid-single digit. I assume that's comparing Q4 this year versus Q4 last year?
Actually, I'm comparing Y on Y. So the whole 2019's average selling price, we guess that will be somewhere around mid-single digit higher than 2018.
I see. So I guess you guys has a bit of price hike in second half of 2018, and that's rolling over into 2019. So if we take into that into consideration, so it seems like the price for this year maybe only growing by low single digit?
Yes, roughly about low to mid single digit. That's true.
Got it. Thank you very much. My second question is regarding your Korea expansion. I'm just wondering, for the products that's produced at this new fab, is it possible to be produced at the existing fabs, or the new products can only be produced at this new fab?
Yes, that's a very important and very good question. The products can be produced by two of our existing fabs. Not all of our existing fabs, but two of our existing fabs.
Right. The reason why I'm asking this question is I'm thinking, assume there's a bigger correction for demand in this down cycle. Is there any possibility that you consider delaying the ramp up of this new fab, or it may be difficult given the engagement with the customers?
Yeah, that is also a very good question as well. I keep asking our, because our new fabs is fully funded by our LTAs. So our customers, it's not. So that's a very special prepayment arrangement. All the CapEx, I said that $430 million CapEx for that Korean fab, it's 100% funded by our LTA customers. So delayed or not depends on our customers' demand. So this is a very, I think we do it as a very professional partner way. So we keep working with our LTA customers and checking them that are you comfortable? You want us to push out the installation a little bit or what? So we work with our customers because for us there is no cash flow pressure. So it is okay for us. If we have to delay, we are okay for this. So if our customers' view is a little bit conservative, they want to receive new wafers from this new fab, a little new expansion capacity a bit later, for example, push out a quarter, 2 quarters, then we will seriously consider, we will work together with our customer to work out a conclusion as well. But so far, we keep working very closely with our customers, but so far our customers ask us to keep everything on schedule. That's current status.
Right. Then will there be a scenario that they keep the shipment from this new fab but lower the wafer demand from your existing fab? Would that be acceptable?
Yeah, no, that's not acceptable. And a good thing is that we have LTAs for the new capacity and existing capacity. So it's both.
Right, got it. Thank you very much. That's all from me. Thank you.
Thank you. Thank you very much for your question.
Thank you. And that was the last question.
Thank you, Lauren. Thank you, everyone. Thanks a lot for attending our earnings call today. Thank you very much. Have a good day.
Thank you. And that concludes today's call. You may now disconnect. Goodbye.
Thank you. Bye.
Okay.